So the question we're looking at is in the area of investment appraisal. So this is investment appraisal. That's what it is. It's investment appraisal. That is one. Now, we know that investment appraisal is a wide. So what specifically are we looking at? We're looking at the area called application of DCF. And the application of DCF has got three types of decision. Number one, should we buy an asset or should we lease it? Number two, how frequently should we replace our assets? And number three is about capital rationing. So these are the three items that we cover here. What's the three? These are the three items that we cover here. Let me just attend to somebody. Okay, let me just send a, resend the login details for one of our colleagues. Okay, so these are the three decisions that you must learn how to make. And in this particular exam, the exam was just full of these decisions. As you may have noticed from your reading through that, this time around the examiner just went flat out on these decisions. I'm sure you noticed that. So let's discuss lease or buy. How do we decide whether to lease an asset or buy it? How do we decide whether to lease an asset or to buy? Well, we're going to discount cash flows. Which cash flows do you discount? You simply focus on the financing cash flows. We focus on the financing cash flows. Because the operating cash flows are similar, whether you lease or buy, the operating cash flows, the cash inflows and cash outflows will be similar. So what do? We leave them out from the decision. So the operating cash flows, don't bother about this. We must leave them out because the operating cash flows will be similar, whether we buy via outright purchase, we acquire via outright purchase, or we lease. So when you look at our questions, yes, they gave details about the benefits of the asset, but the point is we don't need those. Secondly, when it comes to discounting, when you're comparing lease or buy, the discount rate that we must use is the one which reflects financing, and this is after tax cost of borrowing. That's what you must use. And note the work. Don't use the work. Use after tax cost of borrowing. We use the work when we want to make a decision. Should we invest in the asset? If your question is, should we invest? In the asset? Yes, if you want to answer this question, then you use the work. But if the question is about acquisition, of the assets, of the asset, should we go for a lease or should we do an outright purchase? At this point, you are saying, don't use the work, use it after tax cost of borrowing. That is one of the tricks that was in this question. That's one of the tricks that was in this question. To check if you know, one, discount rate to use, and if you realize that you're supposed to ignore the operating cash flows. With that now, let us go straight into the question. Let's try to put down our figures.
So are you able to go through again when to use the work and when not to use the work on
Let's use the question.
Okay.
Let's try to use the question so that we go live. Let's go live. Okay, that's my question there. I'm sure all of you have your question. Mine is here. Okay. So let's go. MM is considering acquisition of new machinery that will reduce operating costs. The new machinery will cost 1.5 and have a 4-year life, at the end of which it will have a scrap of 300. To operate the machinery, a license will be required and the fee is 100. Of 100 is payable at the end of the first year. This license fee will increase by 5% per year in each subsequent year. The new machinery is expected to reduce operating costs by 6 per unit in current price terms. It's expected that the company would finance the acquisition through a 4-year bank loan paying interest and annual before tax rate of 8.5%, 7% forecast sales and production. So here, the examiner wanted to check whether we know what we are doing. So this benefit is supposed to be omitted from the calculation. So the only thing you're supposed to pick are the financing cash flows. Okay. Alternatively, the company could lease the new machinery. The company will pay 4 annual lease rentals of 5, 10 payable in advance at the start of each year. The annual lease rentals include the cost of the license fee. If the company buys the new machinery, it can claim capital allowances on 25% reducing balance. The company pays tax 1 year in arrears at an annual rate of 30%. The company has an after-tax with average cost of capital of 10%. So what we are saying is that for the decision that we are asked to make here, evaluate whether we should lease or buy the machinery. We don't use the 10%. But if the question was calculate the NPV, calculate the NPV to check whether this asset is worthwhile, we could have used what? The 10%. The correct rate to use here is 8.5 remove tax, after tax borrowing cost. So that is what we're supposed to do. Okay. So if we start with the lease option, let's start with the lease option. Let's start with the lease option. Okay. So let's go, people, lease option. We go, yes, 0. Okay. Okay, so let's go. The lease payments. Let's put in the lease payments. So the lease payments, they are in advance, 510. Okay. So these are payments, they're minuses. Minuses. Let's go. Minus. That's the first item. Now there's the tax saving that will be created by these figures, and the tax is paid 1 year in arrears. So the tax savings arising from these will be, now remember 0 and 1 is just the same year. This is the beginning, this is the end. So this really is the same year. 1 point is the beginning, another one. So the first tax benefit really will be removed, will be enjoyed here. Okay. The net cash flows. Net cash flows. Discount factors. Now remember discount factors should be 8.57 brackets 1 minus 30% net of tax. That's net of tax. Could you have the figure, please? Do you have that, all of you?
Yes, sir.
Okay. Okay, so let's go. Have we find our answer? Have we found our answer? This one is not correct. Okay. So this is what is expected. What was the next one? If we list the asset, if we buy the asset, let's buy the asset. Buy option. We buy it for how much? We buy the asset for how much? Can somebody give us a figure, please?
$1.5 million.
Okay. $1.5. And we sell it for how much?
300 kwacha, 300,000 kwacha.
300,000 kwacha. Then the license fee is how much?
100,000 kwacha.
In when is it paid?
At the end of the first year, at the year end.
At the year end. And the how much do we, and does it remain at the same level?
Grows by 5% annually.
It grows by 5% annually. So shall I grow it by 5%? This license fee is a purely business expense. So when the taxman comes, is going to give you a rebate. is going to give you a relief. So this will attract a relief. This will attract a relief of 30%. Okay. More like maintenance costs, repairs and maintenance costs. Those also would attract a rebate for us. Okay. Those would also attract a rebate for us. Let's go. There's the capital allowances, tax saved on the capital allowances. When you buy the asset, it's yours. When you buy your asset, the asset is yours. So you'll be allowed to claim your capital allowances. Okay. When you lease, you don't claim capital allowances, not your asset. You can just claim the saving on the lease payments. So taxes on capital allowances. Let us put capital allowances together. This question gives us an opportunity to practice capital allowance. This one of us has forgotten how to create a capital allowance. This is time to pay attention. In case any of us have, so let's go. Let's go, let's get started. The cost of the asset. Yes, in year one, the asset is costing how much? 1.5. Okay. So that's the cost of the asset. So you start that way. What's the capital allowance? At what percentage? Capital allowance at what percent?
25%.
25%. Okay. So you say times 0.25. Okay. So you say, bring it down here. Guys, in case you have forgotten how to do your capital allowance computation, this is how we do it. Yeah, in case you've forgotten, this is an opportunity for you to check what we do. Okay. In case you have forgotten what we do, this is what we do. There we go. So that's year 3. Come to year 4. What do we do in year 4? Who remembers what we do in year 4? Year 4 has come here. What do we do in year 4? What do we do in year 4? We calculate a balancing allowance. How do we calculate a balancing allowance? You go for the disposal. What's the disposal value?
300.
300. So this is what we do. This is what we do. Have you seen what we do, people, in the final year? Have you seen what we do in the final year? this is almost a must in every exam. I'm sure you all know that you have to calculate one. We have to calculate tax savings. So these are the tax savings that we have. So let's go here. The tax saved again will be in arrears. The tax saving again will be in arrears. The tax saving again will be in arrears. So this is what we have. Net savings. So let's do the net. Okay. If for this is our answer. So this is how we compare the options. Please leave out the savings. That cash saving was of 6 kwacha per unit. Whether you buy or you lease, it's the same. So it's a common cash flow. That's why we throw it out. There's no impact on the decision. Okay. So which one is cheaper then? These are costs. They're both costs. This is a cost and that's a cost there. So you can see that from our calculation, it's cheaper to buy. The outright purchase is cheaper. That is what our computation has shown. Eh? Yeah, but what is important is the process of how we have arrived at the answer. Are we okay, all of us?
I'm not clear on how we got the tax saving on the lease option. The 153 is where did you get the 153?
153, this one? Yeah, yes. So it's 30% on these figures.
Oh, okay.
30%.
Okay, thank you.
So if the assumption on the license fee was paid at the beginning of the year, so the one there, the 100,000, it should have been under year 0.
Yes, it was paid in year 0.
And discounted at one, not at 2.
Yes, please.
Okay.
Yes, please. Lease or buy questions will always be the same. Under the lease, the main items are lease payments and the tax saving. Under the purchase option, you see the asset, the initial cost, and the disposal, and also this issue of a license fee or sometimes repairs and maintenance. Instead of license fee, they say repairs and maintenance, which again are allowed for tax purposes. So the trick was in the use of the 6% here. That's where the trick was. And also making sure the operating cash flows were left out. Okay. Using the equivalent annual cost method.
Excuse me, sir.
Yes, please.
Yes, just trying to take advantage of the situation. How do we treat the if we were using a straight line method, how are we going to treat the fourth year?
They're using the
straight line method and capital allowances.
Oh, what would have done would have said 15 minus 300 divided by 4. That's what we'd have done.
Okay, sir.
It would have been the same figure every year.
Okay.
Okay. How frequently should we replace our assets? So this question has got asset replacement here. The company saw replacing 10 of its motor vehicles in the near future. Each new vehicle costs 150. Trading values of each vehicle declines over time as follows. Okay. The servicing and parts for each motor vehicle cost 10,000 the first year, and this cost is expected to increase by 30% per year as each vehicle grows older. Cleaning the interior and exterior of each motor vehicle to keep it up to the standard will cost 5,000 per car in the first year, and this cost is expected to increase by 10,000 per year. Using the equivalent annual cost method, evaluate whether the company should replace its motor vehicles after 1 year, 2 years, or 3 years. So here they have told us that we must use equivalent annual cost method. So what do? We arrange these cash flows. So let's go. We take the longest cycle. We take the longest cycle. We take the longest cycle. 0, 1, 2, 3. Let's go. We buy the asset. How much? So just pick one asset, a single asset. We pick the single asset. So let's pick the single asset. So this asset will cost us how much? 150,000. Okay. And these are trading values. So if we keep it for 3 years, here 150,000 minus 150. And then when we sell it after 3 years, we sell it for how much?
6,200.
Yes. Okay. Then there are 2 expenses every year. What are those expenses? There's the first one is servicing.
Servicing and parts.
Yes. So there's servicing. Let's we call it this one servicing. And the other one we call it what?
Cleaning.
Okay. So servicing, how much is it? How much is it every year? In the first year, it's what?
10,000.
Yes. Then what will happen to the figure?
To go by 30%.
Yes.
30%.
What of cleaning? What is it?
It's
5,000. In the first year, then it will grow by 30% as well.
It's 10,000, 5,000?
5,000 in the first year.
Mm-hmm.
Then it's expected to grow by 30%.
Okay.
Per year.
Per year. Okay. So this. Okay, fine. Then we discount at what rate?
At 10%.
10%. Okay. So this is every 3 years. If we replace every 3 years, that's what will happen every 3 years. What of every 2 years? We already have everything here. We already have everything here. Every 2 years. We already have all the data. Just cut and paste. Just cut and paste. Let's go every 2 years. So we don't need this. This disappears. Okay. And we sell the asset in the second year for how much?
91,000.
Yes, 91,000. Good. Okay. Let's go. This one, what of when we keep it for 1 year?
Sell it for 113,500.
Is what? We sell it for 13,500.
113,500.
113,500. Okay, there we are. Let's just make sure that everything is captured properly here. Right, let's go. So what are this one? Oh, no, that's something. Yeah, that's something here. 113,500. Okay, there we go. Right, so those are our, so we now have 3 figures. So we say cycle. We have got the cycle for 3 years, for 2 years, and for a single year. And the NPV, let's go here, here, and here. Okay, so these are our figures now. These are our figures. So what do we do about these figures now? We divide by what? To find the equivalent annual cost. So can somebody help us with factors, please? Somebody help us with the factors. For 3 years at 10%, what is it?
Three years at 10% is 2.487.
2.487. Okay. What
2
over?
years at 10% is 1.736. Then
Which is the cheapest policy? Which is the cheapest policy?
the second year cycle.
Yes. 2 years. So must replace every 2 years, eh? We must replace every 2 years. We must replace every 2 years. Is that okay?
Yes, it is. Can you just go up a bit, sir?
There?
Yes, sir. Thank you, sir.
No. Okay, so this is
So with the lease, you use the after-tax cost of capital, not the work. That's a rule of thumb. That's a rule of thumb.
Yes. So that's what you always do, eh? So when you're comparing a lease and buy, use the financing cost. If you're doing the normal investment appraisal, use the one.
Okay.
Yeah, are you able to take it where every after 2 years, sir?
Every after 2 years here?
Yes, please.
All right. that okay? Yes, we shall share the worksheet. We'll share the worksheet, not a problem.
Yeah, that's fine.
The last part of the question was saying, discuss internal sources of finance that may be available to the company. Yeah. So the internal source of finance is cash from the retained earnings. Cash from retained earnings. The profits that you have made over the years. All that money, if you can collect it from your receivables, that is money that you can use. And then the question also implies that you tell us the advantage. The advantage is no dilution of control, no external influence. You don't have to plead with people, no. No issue costs. Disadvantages. Negative effects of reducing on dividends. Yeah. E.g., reduction in share price. Limited amounts. So these are the points you can raise. The question is discuss in terms of finance. So must tell them that internally we use our own resources, which is the reserves that were built over the years. So cash from the retained earnings or from the reserves. The advantage is that there will be no dilution of control, no external influence talking to people, no issue costs, and also negative effects on disadvantages, negative effects of reducing on dividends, e.g., reduction in share price, and also the amounts appear limited. Okay. So this worksheet to be shared with you. This question also where you have to project some income statement is a common question now. Prepare the following forecast financial statements using information provided, an income statement and also a statement of financial position. This question is becoming quite a frequent feature of this paper. It's becoming a frequent feature of our paper. So let us see, how do you prepare these statements? How do you prepare these statements? Let's prepare these statements together. Okay, this will be too long. Let's